Hey traders, happy Monday. Welcome to Charts and Coffee. Great to see everybody. Hope you had a really great weekend, relaxing, probably some football. I hope that ultimately you're ready for this week because we are coming into, I know last week was a biggie, FOMC meeting minutes. We have the non-farm payroll number. This morning we're waking up to some rather big Boeing news, which is going to affect the Dow a bit. But ultimately, what we've got a lot of is data. We have the CPI and the PPI coming up towards the latter end of the week. CPI on Thursday, PPI on Friday. Today's pretty quiet. We've got Bostic at 12:30, which should not affect the day trading window, but I'll have to keep an eye on what's going on from the perspective of Bostic. We have Barr, I believe, speaking this week as well. So keep an eye on the calendar. Williams this week on Wednesday, close to the bell. And then, of course, this week kicks off really ultimately what we would consider to be generally earning season. So overall, if we have movement to the overall upside in financials, that's been that really nice financials buy into the dip, take advantage of the pre-earnings rally. That window, I call it 642. Start finding those uptrends before earnings 6 weeks out. Look for that prime time entry window around 4 to 2 weeks before the earnings release. Take advantage of the bit of follow through and get flat before the earnings. So that means that taking a look at the 12th is really about taking a look at getting out or very much scaling out of the position so that we can manage the kind of risk that earnings presents. Isn't the kind of risk that I want to engage. So we've got a lot going on, and bear with me one moment. Let's get to our questions. Good to see everybody. All right. So as always, gang, phone lines are open for your requests. If you happen to have any questions, feel free to type them on in. Tony says, great job in Benzinga. Yeah, those guys are great. Give me 1 second. Those guys are great. We talked about a lot. I was actually looking at my notes from that conversation. Everything from copper to basic materials to really the potential Boeing effect. And I'm sure a lot of folks will be looking at Boeing for that dip. Now, one of the questions that they gave me this morning, and this is a common question for any stock that's rocked on news, that's rocked on any kind of news. The issue is, are we going to see buying come in today? And if you're ever curious about that, gang, I will tell you this. The first thing I'll recommend, and I'm not uninterested in Boeing because the implications are far wider than just Boeing itself, right? The implications extend to, and let me just darken this up here. I love that I can darken this up on TradingView. There we go. The implications are far wider than just obviously Boeing itself. So we're going to be opening here around 229. And overall, as you can see here, all right, take a peek at where we're opening and look at where there's just kind of a vacuum in terms of size. So when traders would ask me, hey, Rog, do we expect traders to step in and support that level? I always ask myself, well, where have they stepped in and supported before? Right? So maybe 223, maybe 218. As we get down to the 2023 point of control and the 200 exponential, if we're going to see a much larger drop. Now, remember, we're already at 229, so we've cut that range in half, right? So if we continue to drop, when traders ask me, Rog, when would you buy Boeing? Look at where the 200 exponential and the point of control kick in. The 200 is going to be a widely watched level because that's generally speaking the equator. Are we above or below the 200? And then the next step is, where has size come in before? Where have we seen traders engage before? And that's going to be right there around the 200 and the point of control. So overall, when we're looking at a move like this in Boeing, what we want to remember is we don't have all the information. There could be a lot more selling. And if I'm just trying to narrow it down to a zone where we've seen volume come in before, where we've seen opinion come in before, that's what I do. If you want a little bit closer, meaning, let's say, where was the liquidity in the last quarter of 2023? You'll notice not a lot of clarity in terms of a different view. So before you go running into Boeing, make it a short-term setup if you are at all. And remember that the effect on the DIA and the YM will be pretty significant. All right, so moving on. Let's see. All right, so let's see here. Questions. Good morning, good morning. Absolutely. All right. Um, let's jump into then looking at. All right, so if you have any questions, gang, don't be shy, type them on in. So this is what Boeing looks like on the trend. All right, now, this is pretty important, what I'm about to show you. All right. Here is on the 3rd. That was the last day. Now, remember, moving averages, indicators, price action, they don't know, right, the news to come. This is some news that came over the weekend, I believe Alaska Air, right? But I want to show you how often it seems that news and our indicators will overlap. On the 4th, right? On the 4th of January, this is kind of cool, gang. On Thursday, we started to see what? At neutral structure, neutral trend, neutral momentum. Doesn't mean that the downtrend is broken. It simply means that it's losing a little bit of its strength. The structure required to keep a market in a downtrend, we're losing a little bit of its strength. Not that I want to be a short seller, right? But it is a warning. Friday closed the same way. Isn't that interesting? Friday also closed yellow, momentum yellow trend. So would I be as bullish in an environment of a yellow momentum yellow trend? I would not. Now, that by no means suggests that we should be shorting Boeing. That's not my point at all. What I am saying is, when you start to see a trend get a little wobbly, just exercise a little bit of caution. I don't think there's any way to see the future. None of us can see that. But as we open up way down here around 229, 230 today, it will be below both the wave and the daily price movement ranges. So my recommendation is, let the daily price movement range volatility indicator catch up to what we're seeing, and then keep an eye on those volume levels. Now, the reason I'm harping on Boeing here is it's such a great example of what we want to do as traders anyways, but under far more chaos, under far more extremes, right? If our indicators and our process can handle the extremes, everyday vanilla trading is a whole lot easier, right? So if I can say, hey, look, this is how the indicators are warning of a little bit more of a wobbly trend. This is what we're waiting on, meaning the daily price movement ranges to adjust, getting patient, making sure there's not more news to come, waiting for some volume levels. We would do that in any stock pulling back. And so if I look at something like a Microsoft, yeah, Microsoft has lost its trend, right? Microsoft has absolutely lost its trend. Does it mean I can't buy it? Oh gosh, absolutely not. Right? What that means is I want to wait for a more conservative level. So yellow structure, yellow trend. You can see very clearly, gang, this is just traffic light simple. The color of the indicator changes. And then now I know I'll focus on the daily price movement range as a zone. The indicator of structure, right? What is the trend? What is the momentum? That's step one, but it's not going to give me my zone of entry, right? So that's the first step. Its job is to say, hey, you want to be a buyer, because look at the history of the trend. It's been mostly up. Look at the history of the momentum. It's been mostly bullish. I want to be a buyer, but let's do so from a more conservative level, right? And so Microsoft's a great example of want to be a buyer, more conservative because of that neutral, that yellow structure. All right, so Franz asks, what indicators do I use in which time frame? Franz, there's a lot of indicators, obviously, that I like to use. The main ones that I'm talking about here today are my daily price movement ranges and I'm just calling it a super trend right now. How do I measure momentum and structure? However it is that you find support and resistance, and then what the underlying structure of the market is, those are my primary tools. And I'll do that on a daily time frame. You can see here I've got it on a 5-minute time frame. So mostly moving averages can help satisfy that. And then the daily price movement range is historical volatility. All right, any thought on Intel before earnings? So a lot of that's going to be the calendar first. Beating first is the calendar. So if I move this out, right? So when is this? The 25th. Today is the 8th. Am I inside 2 weeks? Not quite. I mean, right on the edge there, right? So frankly, this is the way I would look at this. The 25th is Thursday, right? And that would mean 2 weeks out is this Thursday. The last 642 entry for Intel would have been the 4th. The last time I'll look for a 642 entry, meaning buy the dip, daily price movement range or wave, would be the 11th. I've also talked to the Sector Secrets Mastery folks saying, look, as long as we're going to be out before earnings so that we're not subjected to vol crush, the implied volatility just imploding, I don't mind moving that slightly more aggressive window out for buy the dip opportunities to the 18th. Now, remember, inside 2 weeks, what's going to happen to implied volatility for the options is they're going to continue to be more expensive because we have this known event coming, right? So the window that we get in and the window that we get out is probably just as important as anything else as it is for earnings. The trend obviously should be up. Intel most definitely has that. And then buy the dip into the 11th. Maybe, like I said, if you want to push that window out to the 18th, that's fine. And then be out before the earnings on the 25th. So that would be my thought. And that's exactly what a day and a pullback like the 4th would be. That would be an earnings play. And then, I know a lot of the nervousness around Intel can go back to the semiconductors, can go back to tech, because we've been seeing some sector rotation, right? We see the lagging sectors from 2023, energy and healthcare, and then we see the leading sectors, technology and semis, basically sort of rotating, right? That's what sector rotation is. The very top of the food chain, the top of the Ferris wheel's coming back down while the bottom of the Ferris wheel is going up. And we've seen a bit of that. Now, does that mean there aren't any more buying opportunities in those leaders? No, because sector rotation aside, window dressing of December to window undressing of January, the bigger picture, the biggest picture is the macroeconomic picture, which is that the Federal Reserve is still preparing to cut, gang, maybe as soon as March, but likely March, May, June. All 3 or 2 or 3 of those meetings are going to involve quarter point cuts. That is what's expected unless the data does something different. So hard not to be a bull, gang, hard not to be a bull, especially where we have at least bullishness or bullish to neutral environment. So then that brings up the next question. Do I see the SPY trend down continue? So I would not consider this a trend on the daily. Dimed, I would not consider this a trend down on the daily. In fact, I don't have a single time frame on the SPY or, what I tend to look at, gang, and this is something that I get a lot of questions about. Rob, do you trade the SPY? Do you trade the SPX? And those are alternatives to the more 24-hour market of the ES, right? So the ES trades 23 hours a day. Talk about a complete view around the globe of what's happening to the S&P. Now, if I want to take advantage of something that's more oriented to 9:30 to 4 Eastern, right, Wall Street hours, I can take that idea and execute it in SPY options or SPX options. But the sharpest, most complete price action is going to be in ES. All right. And ultimately, what we want to remember is that if ES is a buy the dip, SPX is a buy the dip. SPY would be a buy the dip. So I don't have a trend down on ES dimed. I don't have a trend down on SPY on any of my time frames, 5, 1 hour, or even the daily. The daily is still in a gorgeous uptrend. And a lot of that goes back to the financials. As long as tech and financials remain strong, it's really tough for the S&P to crumble because those are the two heaviest weighted sectors. Gang, that's the sector secret, right? Not so secret. That's what we focus on in the mastery. This is why we shifted to bullish in the S&P when the NAS started moving higher and financials joined into the party. That's why we were bullish most of last year, right? Because we understand that the stocks heavily weighted and the sectors heavily weighted within the indices dictate where these things are going. So to fight them is never going to work out the way we expect because those sectors, those stocks have to do what the broader averages are doing as well. And that's what allows us to not only find relative outperformers, but just to simply find performance as well. Got to stay bullish, the SPY. So I don't have a downtrend there, my friend. I hope you can see why. The colors at the very bottom of my screen. If they're yellow, it's neutral. If they're green, it's bullish. And I've got to have a lot of red in order to say, hey, this is a downtrend. So thank you for the question. All right. Next up, T-Money asks, do I think the bond market, let's jump on over there, is driving the current narrative with the strong inverse correlation? By the way, the 10-year and the tech SPY for this period. No. T-Money, I don't. Do I think the bond market is driving it? So maybe this might be semantics. I don't disagree with you. We want to look at bonds, don't we? I'm not disagreeing in any way. But what I want to keep in mind is, what is the bond market reacting to? I don't believe in leaders and laggers. So let's just start there. So you might say, okay, Rog, I do. So, I want to be very open and frank. Bonds reflect what bond traders are thinking. So what are bond traders looking at? They're looking at the Federal Reserve. They're looking at possibilities for recession. They're looking at when the Fed funds rate might move, therefore affect the longer term yield, both the 10, both the 30. By the way, both those auctions are this week, T-Money. So then I asked myself, well, what are bonds actually doing? Yields are overall heading lower. Now, when I say overall, let's look back at the last quarter, right? If we start with October is bearish. Come November, by the way, November is when we started to see a real ramp up in expectation that the Federal Reserve could cut a quarter point in March, May, and June. So to no surprise, the bond yields started going down, right? Expecting a dovish Federal Reserve. Recession, who even talks about that anymore? And so as we started moving higher, we eventually ran into the 200, got above the 200, and we are in an uptrend. And you can take a look here at the very bottom of my chart. By the end of December, the first week of December, by the end of the first week of December, and by the end of December, right? That was where the overall uptrend kicked in. So do lower yields help equities? Here's what I'll say. The expectation that the Federal Reserve is going to cut drops yields and helps equities higher. So I don't look at bonds driving anything. I look at that larger macro picture. I hope that makes sense. Now, the way that it looks on the chart, you're right. We would like to see ZB. We would like to see ZN. We'd love to see TLT and IEF, the ETF alternative, move higher as the SPY, QQQ, DIA, IWM all move higher as well. But what's affecting them both? I don't want to look for correlation. I want to look for causation. And I still think the cause is that dovish Federal Reserve. So I hope that makes sense. All right. So no, I do not believe in leading because, by the way, T-Money, let's also remember this. And this was something that I really tried to drive home last year. T-Money, this is the chart of the ZN. You mentioned the 10-year. Take a look. Down, 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 which indicates higher yields, right? Let's take a look at the ZB for last year. Down, 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 down. So here's the problem. Did this lead in any way this uptrend? I've been trying my darndest to get people to let go of this idea that anything leads and anything lags and anything foreshadows. If someone was waiting for the shoe to drop, for the markets to tumble because bond yields were up, because of ZN and ZB, those futures contracts are heading lower. Look how wrong it was. So absolutely, not only should we not focus on it, it's wrong. Does everyone see that? I think, and you're echoing something that gets repeated in the marketplace a lot. So I hope I show you with the actual chart. Gang, bonds and notes were wrong. To look at bonds and notes and say, oh gosh, I should be short equities, cost traders a lot of money last year. So no, we should not, because it's not correct. So I hope that makes sense. In no way is that something that is, by the way, what I'm saying is not the largely held opinion, but charts would show it's the right one. All right. So let's just trade what we see, not what we think or what we hear or what someone says. Because the bottom line is we can say anything we want. But did yields indicate that S&P and NASDAQ were going to head lower? Nope. So keep that in mind. I appreciate the question. Absolutely. Thank you so much. I really appreciate it. T-Money, I know sometimes like, oh gosh, if I type this question, am I going to, there's all that anxiety. I get it. Raising your hand in class. Yeah. But thank you for asking. Really, really important. Okay. Be good to each other. I'll see you tomorrow. Same time, same station. Thanks again, gang. 3 years running of Charts and Coffee every morning. I appreciate everyone tuning in, and we'll do it again tomorrow. Until then.